Hey everybody, today is January 24th, and today we're going to talk about the stock market. The stock market has been pretty much battered over the last couple sessions, and today we're going to talk about the reason why and whether or not the stock market will continue down lower, or is the stock market can recover ahead of the important Fed meeting on Wednesday. And before we begin, please read the disclaimer and you can pause this video as you read it. Okay, so last weekend we had a short week. Last week we had a short week. We only had 4 trading sessions. Monday was Martin Luther King Jr. Day, but unfortunately after that, after the holiday long weekend, we had basically the entire week on Tuesday through Friday was basically all red, right, across all indices, right, the Dow, S&P, and the Nasdaq, right, all red. And today, Monday, we saw the market actually plunge. The Dow was down, excuse me, 700 points earlier, right? But now we're starting to see an attempt at creating a bottom in the market. So right now the bulls are coming in. There's about 19 minutes left or 18 minutes left until the market closes. And the bulls are intending to put in a bullish reversal hammer, right? If we can close this gap, we can turn this candle hammer green. If we can fill this gap in the next 18 minutes, right? But it's been a pretty epic recovery because all of last week we basically saw this downtrend, right? And this morning we had a gap down, but we're attempting to fill this gap now. So the important question is, if we fill this gap, are we going to see the bears tank it tomorrow? Are we going to see perhaps a gap up and put in a bottom, right, to this downtrend? Because we've been in a downtrend really since the beginning of this year, right? Since January 4th, right? We've basically just been down this entire month, right? I mean, look at this month. It's just a big candle, red candle, right? Across all indices, right? It's a big monthly red candle, especially the Nasdaq's been hit pretty hard. The reason is that the market is expecting the Federal Reserve to begin tapering, begin reducing their bond buying program, and also to raise interest rates to fight inflation, right? So that's putting a lot of pressure on the stock market because the dollar's getting stronger, the yields are going up. I mean, look at this, look at these yields, right? I mean, just an epic, this is 2-year and 10-year, right? I mean, just an epic recovery, right, from 2020 crash. Last year, just this entire rally has really put a lot of pressure on the market to pull back down. And we're starting to see a rotation from more risk-on assets to risk-off, from growth stocks to value stocks. And this is why the Nasdaq has been hit the hardest, right? I mean, look at this, breaking below the 200-day. All of them are actually technically below the 200-day. But I mean, the Nasdaq has just been hit really hard, and the S&P 500 actually got hit hard. And actually last week, I felt like the market was oversold because if you look at this was last Friday's close, right? Look at the RSI, that's 26, and right now the RSI is at 24. So below 30 is usually a good time to consider going long, right? Because this is usually signaling very oversold conditions. And the last time the RSI has been that oversold was during the March 2020 crash, right? Caused by the coronavirus pandemic, right? And so historically, when you have such a drastic pullback, these could be good buying opportunities, right? Now, that doesn't mean you have to start buying in now, because last time we saw the market became oversold, but it still kept going down, right? And we ended up forming a bullish divergence as the market continued to go down. The RSI ended up going back up, signaling that the sellers were the momentum was starting to die, and a reversal was starting to come closer, right? And so right now, this doesn't necessarily mean that we've bottomed now, but in my opinion, this could be a good time to at least play for a bounce, right? Because the market doesn't just go straight down; it does bounce and then come down if it does want to go down. Now, this might end up V-reversing or perhaps going sideways for a while before reversing, but the point I'm trying to make is that the market doesn't just go straight down, and I think that at least in the short term we can try to play for a bounce, and that's what I did last Friday. I bought S&P SPY call option right here, right in the middle of that, and this morning I actually bought a call option. I added to my position around about 425 around here, right? So right now, and that position's up, but my Friday's position's down, obviously. So, but overall, it's pretty much like, I would say even between both buys. But yeah, I'm basically trying to play for a bounce at least, right? And then we'll reassess and see what the Fed says on Wednesday, right? The Fed is going to meet on Tuesday, and they're going to announce what their plan is for tapering and interest rate hikes. And there's a lot of speculation as to what they're going to do, and this is why the market is experiencing so much fear right now, right? You see the fear and greed index at 38, right? just a lot of fear in the market right now because people are scared that the Fed is going to taper a lot sooner and raise interest rates, and that's going to put a lot of pressure on growth stocks and stocks in general, and that's going to slow the economy down. And yeah, so that's going to definitely affect the stock prices, and they'd rather just get out now before this might potentially go down lower, right? But right now, the market is looking very oversold, and that's why I think we're seeing a recovery right now. The bulls are pushing the price back up because they do believe that, and a lot of people shorting the market are covering their positions as well. This is why the market is coming up right now, right? But then again, it is still possible this could roll over if the news is bad. So basically, what we want to see on Wednesday is the market is expecting rate hikes and they're expecting tapering. So either the news is going to be better than expected. Maybe they don't do as many rate hikes, or the rate hikes isn't as fast as the magnitude isn't as much as people expect, and perhaps the tapering isn't as soon or as much as people expect. So that would be dovish, that'd be bullish, and the market definitely would rip. Or the market could, or the Federal Reserve could meet people's expectations and say that, hey, we're going to do like the 3 or 4 rate hikes we already talked about in December, and as long as that's what the people are expecting, that means that we already priced this in with this drop, right? The market is trying to price in a certain information that it believes will happen. The only thing that would crash the market, in my opinion, is if we have worse than expected news, right? Maybe they're going to do like 7 or 8 hikes. Maybe it's going to be the hikes are going to be higher magnitude than lower magnitude. Maybe there's going to be more tapering sooner, and maybe they're going to finish the bond buying program a lot sooner than people expected. So that would all be negative. But at this point, I feel like the market is a bit oversold right now. Actually, very oversold. And you can see like this large volume, right? We haven't had volume this large since really all the way back in the middle of 2020, right? Right before the presidential election. So yeah, so the bulls right now doing very good job. I mean, the Dow was down like 700 points, and now it's only down 47 points, right? 12 minutes into the close. Bulls are doing a good job filling this gap. If we can get a gap up tomorrow, that'd be a really good sign of strength for the bulls, right? And just push this pattern up. And of course, my calls would be, very, very well in profit if we can get all the way up here, at least up to this goal line, and see if we're going to face resistance. But really, the most important thing going forward is what's going to happen on Wednesday. And I think I'll make a video on Wednesday or Thursday. I want to give the market more time to digest whatever the news the Fed is going to put out on Wednesday regarding the tapering and the Federal Reserve and the Fed hikes, or the interest rate hikes. Yeah, but for now, I do think that we're going to see at least a short-term bounce within the next day or two, because we're just very, very oversold. I mean, look at this. The Dow is down like 7 days in a row already, right? I mean, this is just crazy. Or 1, 2, 3, 4, 5, yeah, 7 days in a row. And I mean, this is just crazy. When's the last time we saw 7 consecutive red days in a row, right? It's been a very long time, and especially with this much volume, right? And the RSI across all indices is oversold. So I do think we're gonna get a short-term bounce. I already playing that last Friday and today, added to my SPY call positions, and we'll see what the Fed says on Wednesday. Are they going to be dovish? Are they going to meet expectations? Or are they going to be more hawkish than people expect? And we'll see, and we'll talk about, and then we'll see, and we'll reassess going forward, right? This is a post I made on Twitter last week, talking about how I believe that the market is very oversold right now, and we had to hold the 200-day. Unfortunately, and if we didn't hold the 200-day, things could get really ugly, right? So unfortunately, on Friday, the market, if you can see, I made this video 4 hours before the market closed. So the S&P closed below the 200-day, which is bad. And this is why we saw such a huge reaction, a huge plunge this morning, right? People are scared, right? The long-term moving average has been broken, and there was a big knee-jerk reaction, right? But right now, the bulls are coming in, trying to defend this level. And I think that if we can gap up tomorrow, by the way, this pullback filled all these gaps back in October, right? And that's actually a good thing, because now we can start to build a strong base of support around this level, right? And if we can come up, defend this level, and push it up, and then of course consolidate maybe a little more, right below all-time highs, we can push up higher, and we'll have this nice strong base of support here, right? So if the market does come down in the future, we have a lot of volume, a lot of price action around this level. I think traders will be more confident defending the 480 to 500 level if we are able to defend this level. And right now, most major indices are green now, so which is really, really good, right? The fact that we have a bullish reversal hammer candle, right? 9 minutes to close. It's very bullish right now, and tomorrow I do believe that unless we get some surprising news, it should be a good day for the markets. And yeah, but of course the most important thing is what the Fed says, because all of this could be undone if the Fed has hawkish response to in terms of regarding tapering and interest rate hikes. So I'll update you on either Wednesday, Thursday, see how the Fed, what the Fed says, and how the market digests that news. And yeah, we'll update you on the price action going forward. Thank you for watching this video. Please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.